Good morning, good afternoon, good evening, wherever you are located on the planet Earth. Welcome back to another edition of Pre-Market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live at PulseWaveTrading.com, home of the world famous PulseWave price triggers reports that we put right in your hands each and every trading day. What's good, people? Hopefully, you guys were able to attend all of the webinars that we had yesterday. You post waivers out there. If you missed anything, you can go to your dashboard and you can replay any of those at your leisure. Everyone else, in order to partake of the members only videos, well, you got to become a member. The way to do that is to go to PulseWaveTrading.com and choose the package that meets your needs. You can get started trading with us for as little as $9 a month and get it on and popping. Put yourself in a position to make a little bit of money, make a few stacks, build an income stream for yourself. All right, so you can do what you need to do. All right. Let's get into a couple of things. Let's get some business out the way. First and foremost, today is Thursday. So on Thursdays, we get the jobless numbers, and GDP numbers came out this morning, and it was absolutely abysmal. Our GDP was worse than any time in U.S. history. It was like 10 to 20 times worse than the Great Depression. I think the Great Depression was minus 2.9% GDP. Ours came in at like 30 something percent negative, 30 something percent, just some obscene numbers. And I could just feel it in my spirit that the evil individuals responsible for all of this were just sitting back laughing, high-fiving each other at the amount of destruction they were able to cause, not just the U.S. economy, but the world economy. So that is what I believe is going on right now. So I had to just throw that out there for you, and then we're gonna get into some things. We need to talk about it, and we're gonna make it happen. All right, on and popping. All right, so first and foremost, let's get this business out the way. If you're in the live chat, go ahead and smash that like button. You know what it is, you know what we do, and you know how we do it. So go ahead and knock that out. All right, so looking at the overnight futures, it's letting you know what you can expect today. Dow futures are down 310 points at 26,130. NASDAQ 100 is down 123 points at 10,551 and 3/4. The E-mini S&P 500 is down 35 and 3/4 points, and it's trading at 32.17 even. All right. Russell My Hustle's down 20.1 points at 1476.6. Bitcoin Futures Composite Index is at 11,000 even, down $240 after hitting a high last night of $11,405. Let's see here. The nat gas is off 2 pennies, trading at $1.90. Crude oil futures down 92 cents, trading at $40.35 a barrel. All right, the long bond is no longer the long bond. It is now the strong bond. It is up 1 full point and 1/32, trading at 182.10. That's 182 and 10/32. Gold futures are down $6 at $1,970.70. Silver is down 86 cents. It was down over $1 earlier. It's trading at $23.44 an ounce after hitting an overnight low of $23 even. All right, and the overnight high was $24.58. So $1.58 slide from the high. Ouch. People getting punched in the face on silver. US dollar index is down 12 pips at 93.33. And you got the euro right now is up 19 pips at 117.97. Pound sterling is right now up 70 pips at 130.37. Aussie is down 16 pips at 71.55. Canadian dollar is right now up 73 pips at 134.10. And the euro yen is up 8 pips at 123.76. Dollar yen up 12 pips at 105.05. And the Kiwi New Zealand dollar is down 31 pips at 66.38. Soybeans down 1.5 at 8.83 3/4. Corn is unchanged at 326 1/4. And wheat is down 3 1/4 at 529.5. All right, so that's a look at our overnight markets. Now let's take a look at the overnight market news. All right, so you know it's a huge day for earnings, for tech earnings, a huge day. We got Apple, we got Amazon, we got Facebook, all reporting Q2 earnings. Then we got Samsung, we got MasterCard, we got Total, we got Volkswagen. And those are some of the big name highlights on the calendar for earnings today. Germany's economy posted its largest decline since 1970, with GDP shrinking 10% in the second quarter. Europe's biggest economy saw an economic plunge across areas including trade, consumer spending, and investment. I want you to hold on to that. Remember that. All right. Germany's economy posted its largest decline since 1970, with GDP shrinking 10% in the second quarter, which is Europe's biggest economy. All right. Kodak CEO stands to make $135 million after the camera company's stock surged 1,200% in 2 days. All right, Jim, whatever his name is, shares have skyrocketed in value after Kodak secured a $765 million government loan to make drug ingredients. Credit Suisse posted a 24% jump in second quarter net profits and shakes its investment banking division. The Swiss bank is merging its investment banking and trading division with effect from August the 1st. Shell slumps to a $18 billion loss as it takes huge asset write-downs amid low oil prices and slumping demand. The energy giant's gloomy forecast follows a decision to cut its dividend, the first time since World War II. Europe wants to investigate Google's $2.1 billion acquisition of Fitbit. Hot off CEO Sundar Pichai's congressional grilling. The news comes a day after Google CEO was grilled closely before Congress on issues of antitrust. A market research expert breaks down the 3 sectors and 4 stocks that he says are the best to own as a near Cold War between the U.S. and China heats up. It's literally going to be the Cold War, but with who has the supreme technology network in their country. No, I think it's going to be a physical war. But hey, what do I know? All right, let's see. 3 Wall Street pros managing $12 billion in assets share their strategies from profiting from the economy's recovery and explain why investors should be aggressively taking risk now. Yeah, because if not, then the market will dive. Whatever. Global stocks are down. In Europe, Germany's DAX fell 2.9%. Britain's FTSE 100 fell 2%. And the Euro Stoxx 50 fell 2.2%. In Asia, China's Shanghai Composite fell 0.2%. Hong Kong's Hang Seng fell 0.6%, and Japan's Nikkei fell 0.3% at the close. In the U.S., you're looking at about down 1.2%. All right. On the economic front, we have the U.S. second quarter gross domestic product, known as GDP, and jobless claims, which have all come out. Remember, I told you to remember that Germany's economy posted its largest decline since 1970 with a GDP of negative 10%. All right. Europe's biggest economy. Okay, so our economic plunge across areas including trade, consumer spending, and investment. All right, you heard that. So Europe's biggest economy, negative 10% GDP, the biggest since 1970. All right, now comes the U.S. The U.S.'s second quarter GDP crashed by a whopping record 32.9%, which is worse than the Great Depression and Germany's negative 10% combined. The biggest whopping loss in U.S. history, maybe even world history, maybe even the biggest loss in the world across all economies. The biggest question we had ahead of today's unprecedented GDP drop was, how do we show it on a chart without losing the impact of all other prints? Well, you can't. All right, you can't. It's absolutely astonishing. And while the drop, which was generally priced in, was some 5 times worse than the adjusted first quarter GDP of negative 6.9%, it was just fractionally better than the 34.5% expected. Expectations mean nothing. It's about facts. What is the actual print? Don't say, well, yeah, that's bad, but it's not as bad as we thought it was going to be. That does not take it away. That doesn't take it away. Doesn't take it away. All right? That's like watching your friend, head explode in front of you. Your best friend. His head just explodes for whatever reason. And then you say to him, well, look, hey, I know your head exploded, but we expected that your head and your arms would fall off too. At least they didn't fall off. So at least it's not as bad as it could have been. That doesn't change the fact that that was a devastating event. It doesn't soften. It doesn't make it feel better. I'm sorry. That is still absolutely horrid. If the Great Depression was only a mere fraction of that, what does that tell you about where we are? How can we not be in a apocalyptic depression? If during the Great Depression was negative 2.9, negative 3%, how is negative 34.5% not as bad? How are we not in a depression? A supersonic depression. Then again, with a third of the U.S. economy effectively going offline in second quarter, a worse outcome than during the Great Depression, a few percent here and there doesn't really matter. The second quarter decrease in real GDP reflected decreases in consumer spending, exports, inventory, investment, business investment, and housing investment that were partially offset by an increase in government spending, imports. A subtraction of the calculation of GDP decreased. Now, that said, the biggest contributor to the overall GDP drop was the crash in consumption. We've been talking about consumption. All right. Not the cancer consumption, but personal spending consumption. The decrease in consumer spending reflected decreases in services led by healthcare and goods led by clothing and footwear. Breaking down the components of GDP, we get the following. Personal consumption account for the bulk, or the negative 25.5% of the overall negative 32.9% GDP drop, and 5 times more than the negative 4.75 first quarter GDP drop. Fixed investment subtracted another negative 5.38% from the second quarter GDP, which is far worse than the modest 0.23% drop in Q1. Non-residential fixed investment or spending on equipment, structures, and intellectual property fell 27% in Q2 after falling a whopping 6.7% in the prior quarter. Now, change in private inventory subtracted another negative 3.98%, which is 3 times more than the negative 1.3% in Q1. Net exports contributed about 0.68% to GDP, consisting of roughly negative 9.38% drop from exports, offset by a 10.06% boost from imports. Now, the decrease in exports primarily reflected a decrease in goods led by capital goods. Government consumption was a paltry 0.82%, up from a 0.22% in the previous quarter. Wow. Now, for those following the PCE data, the GDP price index fell 1.8% in Q2 after rising 1.4% in the prior quarter. Now, core PCE fell negative 1.1% in Q2 after rising 1.6% in the prior quarter. Meanwhile, even though we already knew this, real disposable personal income, DPI, personal income adjusted for taxes and inflation, increased 44.9% in the second quarter after increasing 2.6% in the first quarter. The increase in DPI was more than accounted for by an increase in personal current transfer receipts, i.e., government social benefits. If you take away the government social benefits, you have nothing. Personal saving as a percentage of disposable personal income was 25.7% in the second quarter, compared with 9.5% in the first quarter. That said, the GDP collapse was expected, and in fact, may be spun as better than expected. The real question is what happens next, and is Q3 the V-shaped recovery quarter? Alas, as both the Fed yesterday and we showed last week, the high-frequency data indicated that the U.S. economy peaked in late June and is once again rolling over. Unbelievable. You can't ignore the facts any longer. They're staring you in the face, slapping you in the face, rather. All right? This is really, really an Orwellian nightmare, is it not? All right, it's getting whack and continuing to get whacker. All right, and we're gonna have to deal with it one way or another. One way or another. What are they gonna do? What are they gonna do? The world is spinning out of control. Did you know that Kodak was halted 14 times the other day as the stock exploded higher? Did you know that? Yeah. And then it continued to rip people's face off. Yes. After soaring as high as $60 a share, Kodak stock has encountered some major turbulence, which set it into a bear market seconds after it exploded higher by 500% and was last trading around $29.71. Meanwhile, the stock has been halted 14 times within the first 90 minutes of trading. Yeah. Very interesting. And your man, James Contenzia, Eastman Kodak's CEO, he bought 47,000 shares of Kodak on June the 23rd. All right. That's what you call insider trading, but don't expect anyone to be brought to justice. Then the market moved 1,050% in 2 days. That's amazing. That's what you call a major lick right there. Wonder who in the inner circle was buying on Monday. What do you think? All right. So yeah, insider trading at its best. This the Kodak situation was analogous to a penny stock when the insiders, they buy first and then they get everyone to pile on and then they take profit ahead of everyone else getting out of the market. Welcome to the world of whackness. That's all I can say. Welcome to the world of complete and utter and total whackness. Yes, our world seems to be coming apart at the seams. All right. We're looking at a world on the verge of spinning literally out of control. Financial writer John Rubino says gold is at a new all-time high, silver is vaulting upward, and there's no end in sight for the massive money printing around the world. All right. Rubino says if you look deeper, you can see the real message in the unfolding events. Quote, it's fun to be a gold bug and see your stacks getting more valuable. But the real message here is the world is on the verge of spinning out of control. That's what gold and silver are signaling. Excuse me, we're just a mess with no way out of this because even before the pandemic hit, we were running deficits in the U.S. of $1 trillion a year. That is an emergency level of government borrowing, but we were doing it in the 10th year of a recovery or expansion. Normally, everybody is back at work paying taxes, government debt goes way down, and sometimes it even turns into surpluses. But that wasn't happening this time, which is a sign the monetary experiment that began in 1971 when we went off the gold standard and went to all fiat currencies everywhere was ending. We are no longer able to manage economies with this much debt just by printing new currency and borrowing more money. The system was going to break down anyway, but the scam pandemic has come along and accelerated that process, end quote. Rubino goes on to say, so now people ask, is there a pain-free way of getting out of this and getting back to normality? And the answer is probably no. I've been telling you no since the giddy up. It's good to see other people are getting on board now. We have to get rid of this debt somehow. I think the global debt to GDP is in the 350% to 400% range, which is the highest ever. We have never had a society that has borrowed this much money before, ever. Past societies have seen their monetary system break down before they got to this point, long before they got to this point. So we are now a historical outlier as to how much debt we have taken on. This means when all this debt gets wiped out, this might be historically worse than anything we have seen in the past. Now, he also predicts that we don't have a tool to fix this if the dollar starts to fall, which it has, at an accelerated rate. That is the end game scenario in the financial system. When the world's reserve currency starts to lose value and the central bank that's managing it doesn't have any way to stop it, then basically everything falls apart. When it happens, the early stage of it will feel like the past few months here. I am not predicting we are headed straight to a dollar collapse or fiat currency collapse, but when it happens, it's going to start feeling a lot like it is now. In closing, he says the reason why so many groups are so angry right now is because the system no longer works for most people. We have an aristocracy that is harvesting the rest of us. All right. The aristocracy is definitely harvesting the rest of us, I can tell you. All right. 1% of the population gets richer and richer year after year at the expense of everyone else. Correct. Rubino goes on to say, look for corrections in the gold and silver markets that will be pretty scary, which I also told you. This is a buy the dip market. The long-term trend for gold and silver are in place, and nothing is going to stop them short of their ultimate fair value. All right. And I have to say he's absolutely correct. 100%. Just look at what happened yesterday. Look what's happening in the market today. All right. People who were trading silver got punched in the face midday yesterday. Why in the world would you get jumping ahead of a Fed announcement? What is wrong with you? What's wrong with you? Speaking of the Fed announcement, as you know, like we always do, we had our FOMC live, okay, and it was the most historic FOMC live we have ever had here at PulseWave Trading. It was enormous. It was ginormous, gigantic, huge, plump, because we were able to catch live on the air the Federal Reserve Chair, and I quote, "The Fed makes policy. BlackRock is an agent of the Fed, and their responsibility is to administer our policies." What in the world are you talking about, Mr. Fed? No one on the panel during the question answer session brought up that at all. It was like they all had earplugs on when he said that, and they didn't hear it and didn't pay attention. No one asked him anything about that. No one questioned none of that. What does that mean? So obviously they had a talking to beforehand and was probably told, you best not bring up any questions regarding that. All right. Obviously they were schooled beforehand. It's obvious. Because how can a monumental statement like that coming out of the Fed not be plastered all over the news? How can that not? We should have broke the internet with that news by now. For decades, men and women have been pointing out the misbehavings of the central banks and how they use Goldman Sachs and JP Morgan and such as their agents. So they say BlackRock is an agent. Now, BlackRock is not JP Morgan. It is not Goldman Sachs. All right. It is not any of that. It is something else. And no one dared question what that means. What do you mean they're an agent? On the street, if someone says that so and so was an agent, that usually entails that they are a snitch. They're snitching. All right, they got a mic. They hooked up to a mic. They got a mic in their underwear. They got a mic in their bra. They got a mic in their hat. They got a mic in their red bottoms. There's a mic everywhere. You go, as soon as you walk through the door of their house, there's mics everywhere. That's what that usually entails. So we want to know as the American people how unelected officials are agents of the central bank, agents of the Fed, administering quote unquote Fed policies. How could you sit there live on TV and let that and just ignore the Tyrannosaurus Rex in the living room? I don't understand that. You're sitting on your couch watching TV, eating popcorn, watching a movie with friends and family, and there's a Tyrannosaurus Rex in the kitchen rampaging, making all types of noise, and no one hears anything. No one's even thinking about it. You're not supposed to talk about the T-Rex in the living room. Whatever. Well, we're going to talk about it today because we need to know. This affects the market in ways that we don't even know because no one's asking the question. No one's asking that question. It should be all over the what is going on? Even the mainstream media is avoiding talking about this issue. How in the world is that? That's making me look sideways at a lot of people right now. All right? Because it's been a handful of us over the years talking about this, and we've been called nuts and conspiracy theorists. You don't know what you're talking about. You don't know what you're talking about. And I don't see no. I subscribe to just about every channel on YouTube, so I can have my finger on the pulse of what's really going on, what's really good. And I ain't seen nothing pop up in my feed yet talking about what the Fed said yesterday. What in the world is going on? We need to dig into this. Where is everybody? Why am I the only one talking about this right now? Are they saying that it doesn't matter that your country is collapsing and you just sit there and you're not even going to talk about it? And you're supposed to be a news channel or alternative news channel? You're supposed to be a market analyst and you're not talking about what the Fed just said out of. This is analogous to the president of the United States coming on here and saying, oh, by the way, a UFO just landed on the White House lawn, and a group of aliens have come out, and we're doing a live press conference. And instead of breaking news on every channel that you watch on cable, breaking into this historic event, they're just going on like nothing's happening. Nothing to see here. But there's a UFO. There are aliens on the White House lawn standing next to the president. Oh, nothing to see here. That's how everyone's treating it. Where's the investigative journalism? No one is talking about it. As I'm talking to you, I'm going through here. I'm looking at my feeds, my various feeds, and I'm not seeing Nathan on this subject. How do you say you are an investor, a trader, an analyst, a researcher, a news person, and you don't talk about this? This is incredible. The Fed has never admitted to anything like that. And now here we are. I don't get it. I don't get it. Now watch. After this live, everybody's gonna start talking about it. It seems like after I do it, then everybody starts jumping in on it. That's usually the way it works. That's usually the way it works. I tell you, man, this is getting crazy. This is getting real crazy. And my question is, what are the people going to do about it? What are the American people going to do? They always say, what can we do? Is there anything we can do? And every time you tell them what they can do, they do nothing. Ron Paul tried to help everybody. He said, let's audit the Fed. Got a movement going. Let's audit the Fed. And then they start flexing their muscles and they shut all of that down. Dude even said, oh, by the way, I'm not gonna run for office. I'm not running for office. Forget it. I'm backing out. I don't want to be JFK. And you can't judge him for that. That's wisdom. If they've already let you know that they're going to do what they do and they're going to get away with it like they always do, then you are smart to avoid all of that, right? So it doesn't mean we don't talk about it in different. All this Black Lives Matter and Antifa protesting, where are people protesting the Fed, man? Where are they at? What's up? I want to know, where is everybody? Where all the internet thugs and where they at? Where's all the trolls now? Where's everybody? No one is dealing with the things that they should be dealing with. Instead, they care about nonsense. They just want to talk about a bunch of nonsense. Nobody want to hear that. Nobody want to hear that stuff you talk about. We want to know what's good with this economy. Because without the economy, you can forget everything else. You can forget everything else. And no one seems to be moved by it at all. It's okay that our government continues to keep all types of secrets and just going on like it's just another day at the office. We can do whatever we want with impunity and no one is going to say anything. You know? So whatever, man. If people don't care about, the fate of the country that they're living in, it is what it is. You know? My man Marketing Live says that they tried to impose regulations on BlackRock like big banks in 2008, but BlackRock said they don't go bankrupt. Clients do. They are not a bank. Reason was to have leverage on them doing the Fed's bidding. Well, you know how we do. We don't avoid difficult subjects. We talk about difficult subjects. We don't hide. We don't shrink from it. Anything that has to do directly with these markets, we're going to go into it and we're going to deal with it. So let's have at it. The mainstream financial press has been remarkably quiet about the Federal Reserve's appointment of BlackRock to manage its massive corporate debt purchase program in response to the COVID-19 crisis. That silence might have a simple explanation. You don't slag your boss if you know what's good for you. BlackRock's CEO, Larry Fink, may now be the most powerful man in the world, overseeing not just the Fed's new potentially $4.5 trillion corporate slush fund, but also managing a $27 trillion global economy. As the world's largest asset manager, BlackRock already was managing $7 trillion for its global corporate investor clients, along with another $20 trillion for clients through its financial risk monitoring software called Aladdin. All right. Now, let that sink in just for a quick second. We're talking about something that's unprecedented that doesn't make any sense at all. How is no one dealing with this? No one's talking about this. Well, we're talking about it today. Yes, it's time to roll up your sleeves and put on your big boy pants and your big girl pants because we got to dive in. The markets are at stake. We're talking about an organization of the world's elite and powerful men that has now been exposed, who are truly running the economies. Your elected officials are not running the economy. They're not. The U.S. Treasury is not running the economy. BlackRock is. One man at the top, the CEO, Larry Fink. As Andrew Gavin Marshall has explained, unlike a bank, asset management firms do not manage and invest their own money, but do so on behalf of their many clients. In the case of BlackRock, those clients come in the form of banks, corporations, insurance companies, pension funds, sovereign wealth funds, central banks, and foundations. Have I not been shouting this from the rooftop for the longest time? With $27 trillion under various forms of its management, BlackRock towers over the finance, insurance, and real estate sectors. This much consolidated financial power may be unprecedented, but with BlackRock involved in virtually every major corporation across the planet, including the mainstream media, including social media, even BlackRock's competitors, if that word even applies, are quiet about Fink's appointment. He was appointed by the Fed. To date, only Pam Martins and Russ Martins at WallStreetOnParade.com are providing the needed ongoing intricate coverage. How many bailouts? Rolling Stone's Matt Taibbi has called this new bailout of Wall Street a bailout of the last bailout in 2008. Less well known is that 2008 Wall Street bailout was itself a bailout of an earlier 2001 Wall Street bailout, in which the Fed pumped more than $100 billion into struggling financial sector wounded by the dot-com bubble burst under the cover of the 9/11 crisis. Did you get that? I'll say it again. The 2008 bailout was a bailout to bail out the previous 2001 9/11 bailout of the dot-com bubble burst. And they did it under the guise of the 9/11 crisis. They snuck that in there. Some attention has lately been paid to the fact that during the 2008 bailout, BlackRock's Larry Fink played a major role in advertising governments and corporations and advising them how to deal with toxic assets from crashing banks. But something important is being overlooked. As was written in the 2016 book Beyond Banksters, these governments and corporations sought Fink's advice, despite the fact that, as Fortune magazine reported in 2008, BlackRock's Larry Fink was an early and vigorous promoter of the same mortgage-backed securities responsible for the crisis. Now his firm is making millions cleaning up those toxic assets, according to Fortune magazine. Clearly, during the years between 2001 Wall Street bailout and the 2008 Wall Street bailout, BlackRock saw an opportunity and acted on it. Then when those securities became toxic, BlackRock saw another opportunity and again acted, which was clever. BlackRock is a key focus in the book, along with McKinsey and Company, because both firms have been playing an outside role in Canada's politics since the election of Prime Minister Justin Trudeau in 2015. Now, he has created a Canada infrastructure bank, widely called the privatization bank by serfs, and has proposed to pour some $120 billion into infrastructure spending in order to attract investment from international financial sectors. Now, as was written previously, in August of 2016, Trudeau was reportedly courting BlackRock in the hopes that some of its huge torrent of money would be directed into Canada for infrastructure projects. Again, we're getting down to the nitty gritty here because 2016 was a pivotal year. It was also the year that I did my documentary, There Is No Collapse. Of course, those private investors will want a sizable return, at least 9% on their investments. So most of those projects would be either one, the outright conversion of a publicly owned asset into a private one, selling off roads, bridges, ports, and airports, water and wastewater systems, etc. Or two, the building of new infrastructure like transit through a public-private partnership. Or three, in which the private sector would pocket the tolls and operate risk-free during the long-term contracts. And that's the clever combination of both, by which an existing public asset would become. Now, more on this is the outrageous display of corporate arrogance. On November the 14th of 2016, BlackRock hosted a private summit in Toronto for a select group of major international investors with trillions of dollars in assets. They were allowed to meet and question Prime Minister Trudeau, Finance Minister Bill Morneau, and Infrastructure Minister Amarjeet Sohi, and other federal officials, but the press was not allowed to be there to record the opportunities that our elected politicians were offering these banksters, again, operating in secrecy. If you're not up to no good, then you don't need to operate in secrecy. The reason you operate in secrecy is because you were up to no good, nefarious means. All right. Now, In the latest move on March the 27th, the same day that the U.S. Congress approved the bailout bill, making BlackRock a key financial overseer, Canada's publicly owned central bank, the Bank of Canada, suddenly announced that BlackRock will act as its advisor for a new quantitative easing program for corporations, basically a money spigot for a struggling corporate sector. What do we call the merger of government and corporations? We call that fascism. There was no tendering process for this role. As one financial writer noted, the BOC governor, Stephen Poloz, appeared to be opting to put urgency ahead of dithering over potential traps, such as conflicts of interest, a rushed tendering process, and bad optics. But let's be clear, the central bank on both sides of the Canada-US border have now placed BlackRock in a primary position for effecting monetary and fiscal policy in both countries. That is much more than bad optics. This is flagrant corporatism. There's a terrible irony here, and it's worth some attention. Now, as was written prior in the book Beyond Banksters in 2016, BlackRock was a managing mere 15 trillion, not the 27 trillion it's managing now. Not surprisingly, for several years, there's been some financial voices calling for BlackRock to be designated as a systemically important financial institute, or SIFI, which would mean that it would be far more heavily regulated and would need to meet potentially higher capital requirements from U.S. regulators. All right. Now, as quoted from The Economist magazine, for example, which in 2013 was worried that because so many companies rely on BlackRock's Aladdin financial risk monitoring software, there's a danger that they'd all jump the same way and make things worse. All right. That's called capitulation. All right. You don't want systemic capitulation. In other words, if everyone's using the same thing, then they're going to move the same way. Did I not talk about that recently? Did I not just talk about that? Did I not just expose that in the piece that I did talking about failed systems, failed models? One of the dangers is if everyone's using the same model at the same time in the same way, you're gonna have a problem. Now, similarly, the U.S. Treasury Department officials of financial research had issued a 2013 report that concluded that asset management firms like BlackRock, all right, like BlackRock, financial management, asset management firm, and the funds that they run are vulnerable to shocks and may engage in a herding behavior that could amplify a shock to the financial system. Correct. Does long-term capital management ring a bell? But BlackRock had long been lobbying against being considered a SIFI, a SIFI. Then in 2014, BlackRock executives somehow obtained a confidential Federal Reserve PowerPoint presentation that implied that BlackRock could pose the same financial risk as big banks. Angered by this new jibe, BlackRock lobbied hard against this view, and as was written prior in April of 2016, the company avoided greater oversight from regulators in the U.S. Consider BlackRock's position now. The new bailout bill not only further erases the line between the Federal Reserve and the U.S. Treasury, it places BlackRock effectively in an overseer position for both. Now, those lowly bureaucrats from both institutions who had attempted to turn BlackRock into a SFII are now answering to Larry Fink. How clever. And what is the most thorough critique of the BlackRock appointment to date, a March 27th letter from the Sunrise Movement to Federal Reserve Chair Jerome Powell noted, quote, By giving BlackRock full control of this debt buyout program, the Fed is further entwining the roles of government and private actors. In doing so, it makes BlackRock even more systemically important to the financial system. Yet BlackRock is not subject to the regulatory scrutiny of even smaller systemically important financial institutions, end quote. So what do you make of this? It's called stealth bailouts. The 30 signers of that letter to Powell include public citizens, as well as many environmental organizations such as Greenpeace, the Indigenous Environmental Network, Amazon Watch, Stand.Earth, and the Rainforest Action Network. They rightly express concern about BlackRock's many conflicts of interest and especially note corporate bond buying programs such as these may be stealth fossil fuel company bailouts if adequate climate safeguards are not applied. The Federal Reserve should not prop up industry destroying the climate and creating further risk to the financial system. And many of our organizations will be asking Congress to take legislative action to prevent this. But money talks, lobbyists walk. Just days later, on April the 3rd, 7 CEOs from ExxonMobil, Chevron Corp., Continental Resources, Occidental Petroleum, Devon Energy, Phillips 66, and Energy Transfer had a private meeting with President Donald J. Trump, who knows what they asked for or were promised. The New York Times attempted to assure readers that BlackRock won't be making a mint off of the Federal Reserve and will earn relatively modest fees for helping the Fed run a bond buying program to steady markets unsettled by the scam pandemic. But that assurance largely misses the point. Much more important is the herding behavior that a large asset manager like BlackRock is capable of and about which various economists have expressed concern. With 70 offices in 30 countries and a data farm called Aladdin advising around the clock on that $20 trillion investment for clients, the potential for BlackRock to shape the global economy to its liking is formidable. And to that, the fact that BlackRock is now also advising Canada's central bank, the fact that they're acting as an agent of the Fed. In Canada, they're still waiting to see if Trudeau's government gives another bailout to the Alberta oil patch. The announcement, with possibly as much as $15 billion pending, will likely come very soon. With BlackRock a major shareholder in almost every oil company involved in the tar sands and around the globe, it will be difficult for the government to explain such a bailout without looking like it's taking direction from Larry Fink. But isn't that what it is? Isn't that exactly what it's doing? Is it not? How can you say it's not? On the other hand, maybe this scam pandemic has moved everything to a new normal where there's no such thing as bad optics, only urgent, pragmatic action. Again, that's very clever. Now, the last time the financial press indulged in massive coverage of BlackRock was during the 2016 U.S. presidential campaign, when numerous financial pundits were exchanging gossip about Fink's desire and potential to be Hillary Clinton's Treasury Secretary. Of course, the result of the election changed all that. But now, with Larry Fink overseeing the virtual merger of the Fed and Treasury while advising Treasury Steve Mnuchin, his position might even be more powerful than any appointment Clinton would have made. Again, this is very clever. They're playing chess while everybody else is playing checkers. This is incredible. Now, as Matt Beebe observed way back in 2009, in the midst of the previous bailout, by creating an urgent crisis that can only be solved by those fluent in a language too complex for ordinary serfs, the mainstream people, to understand. The Wall Street crowd has turned the vast majority of Americans into non-participants in their own political future. There is a reason it used to be a crime in the Confederate States to teach a slave to read. Literacy is power. All right? That's why they made it a crime in the Confederate States to teach a slave to read, because literacy is power. Knowledge is power. The ability to read with comprehension and obtain information with understanding is power. In the age of CDS, credit default swaps, and CDO, collateralized debt obligations, most of us are financial illiterates. By making an already too complex economy even more complex, Wall Street has used the 2008 crisis to effect a historic, revolutionary change in our political system, transforming a constitutional republic into a two-tiered state, one with plugged-in financial bureaucrats above and clueless serf customers below, or sheeple, or like Goldman Sachs called them, Muppets. All right? To Wall Street, you're a Muppet. So keep your eyes on your pension fund and Social Security, my fellow serfs, or should I say fellow slaves. Larry Fink has long been committed to privatizing Social Security, and this current crisis might just be the right opportunity. Of course, it will be called something innocuous or warm and fuzzy, like the CARES Act, and it will be greeted in the mainstream media as an urgent, pragmatic decision. Ladies and gentlemen, welcome to the New World Order. I'm just telling you, this is why no one's talking about it, ladies and gentlemen. Anyone that claims to be alternative media should be all over this. But as of yet, I have not heard 1 ounce of information talked about it. If it wasn't for Joyce Nelson, her article, BlackRock Takes Command, in the book being referenced, I tell you, I don't know if anyone would be talking about this. Straight up. This is crazy. Crazy. And no one's dealing with it. But we deal with it here on this channel. We don't play no games. We don't pull no punches. We talk. We go in. We deal with reality. Because that is what we are called to do. Speak truth to power, right? Well, how about this one? You didn't really hear about this in the news either, probably. How about this? How about how Kennedy Jr. is warning parents about the danger of using largely untested COVID vaccines on children? How about that? A very heated debate between Kennedy Jr. and the Dershowitz on a vaccine debate. Heated. Mad heated. You're not going to hear too much about that, I'm sure. They don't want you to know that. They don't want you to talk about that. They want you to keep ignorant, keep stupid. They don't want you knowing all about this stuff. They want to protect themselves. They're protecting themselves from you. That's what they're doing. They're protecting themselves from you because they fear the people. They always have and always will, and rightfully so, because when you're up to no good, you always hide and do your dirt in the shadows. That's what they do. That's how they roll. They do things in the shadows. So all I'm saying, people, is please open up your eyes. Please know and see what's going on. And man, welcome. Welcome to the New World Order. Please take a seat. Your name will be called shortly. All right. This is where we are. This is our reality in 2020. We're wrapping up the last full trading week of July. And next week, when we come back, it will be August. August is one of the least talked about months on Wall Street and in the trading arena. One of the reasons is because they don't know what they don't know. So let me break it down for you. August is the most pivotal month in the markets, bar none. It's not September. It's not Rocktober. It's August. August is what sets up the Rocktober. August sets everything up. Everything is about August. Markets that are going to see an incredible crash usually top out in August. And usually it's around the end of August. All right? I'm just saying. So I did my part. I talked about what needed to be talked about. We need to talk about BlackRock. BlackRock, an agent of the Fed. Really? Yep. So with that being said, y'all know what it is. Y'all know what we do. PulseWaveTrading.com. Come over here and break bread with us. Learn how to trade these markets. Learn how you can create an income stream for yourself and your family. Because at the end of the day, that is what this is all about. Creating income streams for you and your family. You cannot rely on the government to bail you out. All right? They don't have any money. They don't have the money, all right, to do that. So don't look for help from them. All right? Just don't do it. They're running out of options. And I told you the end game is coming for your pensions and your Social Security disability. I'm not trying to scare anyone to death. I'm just trying to give you the realities of what is happening. And even as we speak today, some things are happening. There was a secondary crash alert on the Dow today. And guess what? It is moving exactly like the PulseWave price trigger report told you it was going to move. The other indices are pulling back too, which is true, but not to the magnitude that the Dow is pulling back. The Dow is leading all the other indices right now on the way down. All right? Secondary crash alert playing out just fine. The other indices came into today with no crash alert. They're just pulling back. And guess who's pulling back the least? Guess who's not pulse waving? Who's not really participating? Are you ready? It's the Russell. Is the weakest becoming the strongest? Now, tomorrow is Take Back Friday. You know, tonight on the end of the day report, we give out the numbers for Friday. We give you those intraday price inflection points that you need to be privy to. But I'm here to tell you right now that the pullback you're seeing in the market today is just that. It's just a pullback. It's not a crash. It is a pullback. Yeah, they chopping the dollar. I go chop your dollar. Yeah, they chopping that dollar. But the dollar's really hanging in there though. Yeah, we flirt with the 92 handle. We got as low as 93.19, but it's not really breaking away like you would expect. But it is definitely moving. It's definitely moving. So I just had to peep game for you guys. I had to give you some things that were happening today so that you could be fully equipped and aware to what was going on and not be ignorant of it. So with that said, man, like I said, I'm done. I'm out. I'll see the rest of you guys in the trading room. Yesterday's live trading webinar was very, very good. If you missed it, you're going to want to check that out because we go over how to manage your open positions. We talked about legging in. How do you leg in and build a position? And then we went over the pop method and all of that good stuff. So if you missed it, you're going to want to go and check it. It should be available on your dashboard. and I do plan to do another one. All right, so well, let's shoot for this coming Wednesday and see if we can make it happen. All right. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.